Well, thank you, Mr. Chair, and welcome to our guests. My first questions are going to be to Mr. Terry Rock at Platform Calgary. Mr. Rock, thanks very much for your testimony here today, and I really focused on what you brought to the table here for what it takes for a successful innovation company: team, capital, and customers. But I'd like you to go through that in a little more detail for us, please. What does team mean, and how does team get rewarded for being in a tech company and the choices they make when they decide to be in a tech company versus being somewhere else, please?
Yeah, well, thank you for the question through the chair. Behind me is 600 member companies. In a given year, we would have up to 700 people taking programs to become entrepreneurs in these tech companies. And we focus on that founder and then the first 5 people. We have a cafe downstairs that sells instant ramen for a reason. These folks are taking it, a lot of them are leaving high-paying jobs, and they're pursuing the creation of a business that can create prosperity and more jobs into the future. And they're giving up things. They're giving up steady incomes. And a lot of times the people here, it will take them 3 to 5 years to actually hit a point where they can start to pay themselves properly. But they're taking risks so that they can do that.
Okay, Mr. Rock, I'm sorry, I've only got a little bit of time here. So, so the issue is they take lower pay because they get options in the companies.
Correct. Yes, exactly.
Thank you very much.
And yes,
it's a choice. Yeah. Likewise with capital, can you explain the motivation for capital to invest in companies that are startups that you incubate there, please?
Yes, sure. So they're looking, venture would be a very high risk investment. They will make a portfolio bet, invest in 20 plus companies, hoping that one of those or two will be big successes. The other ones they're expecting to write off. They will hold that investment for over a decade and hope then to get the return after that. They are not paid. They're giving up interest, but they're making a significant choice to invest in a high risk area. It's the only way these companies can actually grow as fast as their potential.
Sorry, over the last number of years, how well has Calgary in particular done through Platform Calgary in attracting venture capital to your companies?
Well, Alberta has been on a roll. We have been growing at one of the fastest growing venture jurisdictions in Canada. Just last year, I'm looking actually Q3 in Alberta, we're at 577 million, 714 million last year. We had an extended run of year-over-year increases. And what's really important is that we keep that going. That's the most important thing for us, is that we're just getting started here, catching up to the rest of Ontario, Quebec, and British Columbia.
Okay. Thanks, Mr. Rock. Is it safe to say that a change in the way people are rewarded, both at the employee level and at the investor level, is going to change the amount of investments and the amount of founders and innovators that are working in your space?
Yes, it is already happening.
Can you give us some data quickly on that, about what you're seeing?
Well, I don't have specific data, because I do know companies that are being attracted to the U.S. and when their first investment comes from the U.S., they become more likely to move there. I prefer not to say the people that are dealing with this. Over the majority, 58% of the venture that was invested in Canada in the first 3 quarters of this year came from the U.S. We need local investors to keep these people here. And we're talking to investors. They are frustrated with the current state.
Okay, thank you. The last thing I'm going to ask you is the whole notion about government workarounds. When government changes the tax structure the way they've done it here, that really demotivates your investors and your employees that are in your companies. What do the governments get involved in programs and everything else, and what is the effective friction caused by that?
There's 2 pieces of friction. One is that the rules of the game are changing, and people are reallocating their capital all the time. And the other part of it is, the market will work if we set the incentives up properly up front. These people do not like applying for programs or cutting through, multiple different exemptions. They're really looking for a straightforward market setup with clear rules that will allow them to deploy their capital with certainty.
Safe to say that the simpler you make this, the easier it's going to be to get innovation and growth in this country. Is that true?
Yes.
Thank you. And my next question is going to be to David Clarke over at the TMX Group. Mr. Clarke, you talked about 3,000 companies that are represented on TMX Group, and you talked about the mining exploration tax credit. Mining exploration tax credit is something that is grossly affected by the increase in capital gains. Would you say?
Yes, I would.
Can you explain that quickly to the committee, that effectively it nullifies the whole gain, the whole reason for having the METC?
Well, the whole point is that, oh, sorry, am I on? Yeah. The whole point of the credit is that it de-risks the sort of exploration investment for the company, because it allows the company to flow the law. Sorry,
I just have to finalize here.
You're out of time.
The issue is, of course, by increasing the capital gain, you more or less nullify the motivation for being in the mining exploration tax credit, correct?
It decreases the incentive, certainly. Yeah.